Carlson, and on behalf of KCSA Strategic Communications, as well as our co-hosts OTC Markets Group and ATB Capital Markets, we're very pleased you have joined us for our next live presentation from Cannara Biotech. Before I introduce our speaker, a few points to note. Please submit your questions in the questions box to the bottom left of the slides. Once the Q&A session is ended, don't log out. You will automatically be transferred into the Cannara Biotech booth, where you can continue to ask questions via chat and access additional shareholder materials. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Nick Sosiak, Chief Financial Officer of Cannara Biotech, which trades on the OTCQB under the symbol LOVFF and on the TSXV under the symbol LOVE. Welcome, Nick.
Hi, Phil. Thank you. Well, today is with great pleasure to present you with our company, Cannara Biotech Inc., a vertically integrated producer of premium-grade cannabis products and derivative products with one of the largest indoor cannabis cultivations in Canada and in Quebec. Our focus is on purposefully curated premium-grade cannabis products for the Quebec and Canadian market. We can achieve this with our process of using rare genetics and following a craft post-harvesting process, which includes hang drying, hand trim, and slow cure. I'm presenting to you with a short disclosure. Please take the time to read it after the presentation. So Cannara, our main focus is on premium quality of cannabis products. We've noticed in the market today a big shift towards premium quality cannabis products, at premium grade cannabis products, and it is the heart of our ethos. Our cannabis is grown employing methods used in the most sophisticated markets in the world, such as California, cultivated from rare genetics, hang-dried, slow-cured, and hand-trimmed. I repeat this because this is the ethos of Cannara. We are focused on delivering this kind of quality product, which will transfer into our brand and our market share. In order to do this, Cannara has two flagship assets. Our first one is located in Farnham, Quebec. It is 625,000 square foot indoor cultivation facility. Currently licensed as phase 1, 170,000 square feet. We are currently operational in 18 grow rooms measuring 2,500 square feet each, producing cannabis on a weekly basis. It is fully automated with biomonitoring sensors in every room to ensure optimal conditions and to increase our plant yield. Our second facility, which we just acquired in the month of June, is Valleyfield facility, acquired from the Green Organic Dutchman. This facility is a hybrid indoor greenhouse facility that occupies 1 million square feet on a 3 million square foot piece of land and provides the company the ability to increase its output capacity up to 128,000 kilos. This facility is a transformational acquisition for Cannara, as it allows Cannara to achieve increased production capacity, where currently it is required the most, as I will present in my further presentation. The facility at Valleyfield is separated into 24 zones and is a hybrid facility. Cannara is focused on premium grade cannabis, and in order to achieve that, Cannara will be using this purposely built facility and mimicking indoor conditions by blocking out the whole greenhouse. In addition, the greenhouse is hermetically sealed, which is completely different from any other greenhouse that is grown for vegetable growing. This greenhouse was built by German engineers purposely for cannabis. And we strongly believe that the quality of our greenhouse will mimic the quality that we're able to produce at our Farnham facility. The main greenhouse is 600,000 square feet, which allows us to achieve our 125,000 kilogram production across both facilities. In addition to the main greenhouse, we have about 200,000 square feet of cannabis 2.0 processing capacity, where we intend to make solventless hash products, butane hash products, as well as CBD and THC oil for the Quebec and Canadian market. In addition to the processing center, we have an additional 200,000 square foot rooftop greenhouse, which may be used for future expansion or leased out to greenhouse growers. Since our market launch in late February 2021, our company has emerged as one of Quebec's fastest growing licensed producer by delivering a strategic portfolio of brands with premium grade products at disruptive retail pricing. This has allowed us to carve out a market share in Quebec with the product categories we currently serve. On the left-hand side, you will take notice of our financial outlook as of our second quarter, which ended on February 28, 2021, which was a couple of days before our retail sales. Our retail debut commenced in Q3 of 2021. To date, our year-to-date revenues for fiscal 2021 have reached up to $10.2 million, with Q3 standing out as our retail debut of reaching a 3-month revenue of $7.1 million. We have 3 streams of revenue at here at Cannara, one which is generated from retail sales, which is currently generated from Quebec marketplace. We have wholesale revenues, which is cannabis sold to other licensed producers, which the company will slowly be moving away from wholesale sales and into retail sales in Quebec and the rest of Canada. In addition to rental income, which is sourced from our Farnham facility, with the remaining square footage that's currently not licensed, leased out to tenants for long-term contracts. What differentiates Cannara is the opportunity in Quebec and our foothold in Quebec and our assets that are located in Quebec. The market in Quebec has experienced a rapid growth since legalization, a trend which we believe will continue as consumers migrate from the illicit trade to experience quality, traceable products, competitive pricing, and improved in-store buying experience. Quebec sales have grown from $240 million in 2019 to $311 million in 2020, and are on track to reach $500 million in 2021. Quebec's retail footprint has grown from 28 stores in 2019 to 68 stores in 2021, and is expected to reach 90 stores by 2022. As you can see by the graphs on this chart, Quebec is the second largest cannabis market in Canada, with retail sales in 2020 of $311 million, with only 68 stores, compared to Ontario with $385 million of sales in 800 plus stores. On top of the market, there's only 97 brands in Quebec compared to 218 brands in Ontario, serviced by 26 producers in Quebec versus 105 in Ontario. On top of the very great market in Quebec is the cost advantage that we're able to absorb here in Quebec. Quebec offers some of the lowest electricity and labor rates across Canada, the 2 largest cost inputs in cannabis cultivation. This positions Cannara for national success, given its superior cannabis products, lower operating costs, and lower retail selling price when compared to premium cannabis products produced in other parts of the country. Electricity rates for Cannara is the lowest in the country at 5.2 cents a kilowatt. This is at our Farnham facility. At our Valleyfield facility, we were able to achieve a 3.6 cent cost per kilowatt with the preferential agreement with Hydro-Quebec due to our agricultural zoning. In addition to lower electricity costs, Quebec has also the lowest cost of labor in the major metropolitan areas of Canada. Cost of labor and cost of electricity are the 2 largest cost inputs in cannabis production. Cannara's value prop is where we differentiate ourselves. We offer quadruple A quality cannabis products at disruptive pricing, which has resulted in demand levels that supersede our current supply. In addition to product category quality, our attention to detail, unique packaging, community responsiveness, and transparency collectively adds to our value proposition. As a result, products have become part of our consumer daily picking, which in turn has had compounded effect on the growth of our company. Cannara is a very early company. We've only launched in February 2021 of this year. And as you can see on the graph on the right-hand side, from our initial launch of the last week of February, demand has significantly increased in the months following our launch. Pink line shows how much units are sold, and the green line shows how much demand are requested by SQDC alone. There's a gap, and that's because of our production capacity. We're fully selling out everything that's produced on a weekly basis here in Farnham. And that's a problem that I don't think other cannabis companies have in terms of we don't have any inventory in our vault. This led to our acquisition of Valleyfield, which allows us to expedite our production capacity to reach the demand that we're currently representing here in Quebec with only 60 stores, which are expected to increase double by next year. The biggest value proposition is our pricing. We are able to provide to the market quadruple A quality product at a very affordable pricing. $24.20 is our flagship price for all our 3.5 products under the Tribal brand, which I will get into my following slides. But you can see how the disruptive pricing and the quality aspect has led to the demand that we're seeing here at Canara. A little bit of history of Cannara. Cannara was incorporated in 2018, purchased its first facility, Farnham facility, in 2018 and commenced construction in 2019. Became a public company in 2019 and applied for its cultivation license. It finally received its sales license in January 8th, 2021, and began retail sales in February 25th of this year. In the interim prior to delivering to the SQDC, the company was focused on cultivating and improving its operation, in addition to selling its products through wholesale channels. On April 8th, 2021, the company graduated from the CSE to the TSXV. And on June 10th, 2021, the company announced a significant acquisition of the Green Organic Dutchman's Valleyfield facility for purchase price of $27 million. Cannara portfolio brands consists of 3 brands: Tribal, Nugs, and Orchid. Our portfolio is distinctive and purposeful, each filling a white space in Canada's current cannabis market. All 3 brands are currently grown indoor, are hang-dried, slow-cured, and hand-trimmed to preserve the flower's natural properties. So as you can see, in terms of Cannara's ethos of premium quality, all our brands offer premium quality. Where we differentiate is further down in the brand offering. Our first brand offering is Tribal. Tribal delivers an uncompromising premium-grade cannabis experience to consumers who have a deep relationship with cannabis. From pheno-hunting rare genetics to unfolding each strain lineage and flavor profile, Tribal is a journey, not a destination. Tribal will be focused on genetic rotation, consistently rotating genetics, offering the market choice. It is in airtight packaging, which is a unique packaging solution that's currently not seen in the Quebec market. In addition, all of Tribal's products are above 20% THC and have terpenes of 3 to 5%, which is an indicator of quality. Our second brand is Nugs. Nugs is a cult-worthy movement committed to abundance, quality, and value. Available in bulk formats, Nugs only offers a disruptive product line designed for long-time users who have a sharp sense for product quality and on the lookout for better value. Again, quality, premium quality cannabis, airtight packaging, THC that's over 20% with terpenes in the high range at affordable pricing. Nugs will also house our solventless hash products that will be launched later this year. Finally, our third brand is Orchid CBD. Orchid is a wellness brand dedicated to providing rare strains, CBD dominant strains, terpene rich, trichome covered, that deliver a blissful experience with no compromise on quality and flavor. Orchid CBD will be focused on CBD strains, cultivars for its dry flower and pre-roll products, in addition to producing CBD and THC tinctures for the Quebec and Canada market. Currently, we have 6 genetics that are out in the market: Gelato Mint, Cuban Links, Dositos, Critical Mass, CBD Runs, and Early Lemon Berry. Cannara has identified early on that genetics will be a key factor in the Canadian cannabis market. Our team has secured an extensive bank of cannabis cultivars, including some of the rarest and most sought-after strains in Canada, deliver constant innovation and choice to our end consumers. This will allow us to continue propelling our brands and offering new product SKUs to the Canadian cannabis market. Our executive team is lean and experienced and passionate. We operate, our team comes from operating in highly regulated industries such as tobacco, pharmaceutical, technology, and we all have the experience to drive the company to the next chapter. In addition to our strong executive team, we have a robust board of directors, including Mary Durocher, who's very involved in the cannabis industry from a regulatory perspective, Mr. Donald Olds, who has a vast experience in financial, and has a great financial background and vast experience in pharmaceutical and technology companies, Mr. Jack Kay, who was the Chief Executive Officer of Apotex, and Mr. Derek Stern, who's the Vice President of the Lembec and was an integral part of the acquisition of both facilities, Farnham and Battlefield. In conclusion, I would like to leave you with 5 reasons to invest in Cannara. Firstly, it's our value proposition. We are providing premium grade cannabis at affordable pricing, something that we currently have not identified that is available on the market. We've also had a successful brand launch and SKU launch, where current demand far outweighs our production capacity. We have a focused brand strategy with 3 flagship brands, Tribal, Nugs, and Orchid, that can continue propelling into the future. We are also vertically integrated with own cultivation assets spanning over 1.6 million square feet and an ability to produce up to 125,000 square feet. We are taking a crawl, walk, run approach and not overexpanding, making sure that the demand is there and our product quality meets consumer needs, and then growing into that with our production assets. And finally, the 5th reason is Quebec. We are based in Quebec with access to significant cost advantages and a lower competitive market. Now I'll leave you with a 1-minute video showing Cannara's true colors. And that concludes my presentation for today. I will open it up to Q&A. Are cannabis imports a possibility in the future, and how will you be prepared to compete with lower priced imports? From our understanding of the Canadian cannabis market, imports are currently not in the foreseeable future. We do see exports happening to European countries, but we do not see imports being a threat to us in the near future. Do you have any other production cost advantages in addition to cost of power generation? In addition to our cost of electricity, which is the lowest in the country, we have the lowest cost of labor in the metropolitan areas of Canada. In addition, our cost synergies between both facilities, we have two large-scale facilities that are located just about an hour away from each other. So the synergies and the cost advantages that we can leverage off both facilities is definitely an advantage to Canara. Are you able to export your products to all Canadian provinces? Yes, we do. Our sales license allows us to export to all Canadian provinces. We have to register in each province with each provincial regulatory to sell in that province. We've done that with OCS and in Ontario and SLGA in Saskatchewan. And we are in the process of doing other registrations, but given that our product and our demand is, our production capacity is not matching the demand in Quebec, and Quebec is our primary market, we're taking a slow approach to the other markets, making sure that Quebec is, the demand and production is fully satisfied before we cater to other markets at a grand scale. Great monthly progress. What are the drivers behind your monthly revenue growth? I believe the biggest driver is our retail sales. We're an early company in the cannabis market. It's been 2 years and only less than 6 months of having a retail sales license and less than 5 months of actually being in market. So the increase in our Q3 revenues is definitely related to our retail debut in SQDC in Quebec. How large is the black market in Quebec? At this point, we don't know how large the cannabis market is in Quebec, the black market. We know that the legal market is on track to 500 million by 2021. And we believe that anywhere between 20 to 40% of that market is currently captured, represents the captured market of the black market. I don't see any further questions, so I thank you very much for everyone's time. And please, if there's any questions, feel free to reach out. You can reach me by email at nick@cannara.ca. Thank you, everyone.